Where's the value right now in bonds? To talk about that, let's bring in John Stopford, who, of course, is from Investec Asset Management, head of multi-asset income. John, thanks for joining us today. Is this it? Is this the big move up in yields that many have predicted over the last 30 years, but few have got wrong? Few have got right, should I say?
Yeah, I think, we've obviously been a very long bull market, and as the trend line comes down over time, so it gets incrementally closer to current levels. But our view is that, the level we've been talking about, 260, is the highest level since the election, but it's probably not really a bear market. At the moment, we've seen something of a grinding sell-off in treasuries led by the short end as people have priced in more rate hikes. But I don't think sentiment has cracked to the extent that it's a genuine bear market. Maybe we'll see some follow through if it does manage to get through 260. But I think if you look at positioning, there are a lot of short positions out there already. Yeah,
where's the value in the fixed income space right now?
Well, I think ultimately 30 years are probably the right place to be in the US curve. I think the curve should continue to flatten. There's nothing to stop the Fed from continuing to tighten. Financial conditions are very loose. Growth is pretty strong. Unemployment is low. Inflation at the margin is ticking higher. Elsewhere, we still like Australia. We think that's a market. We had labour market data today, record low wage increases. There's not much pressure on the Australian Reserve Bank to raise interest rates, but you pick up decent yield across the curve there and a real yield, which is unusual in many major bond markets. So we think there's selective value, but then there are plenty of places we want to avoid as well.